Hi everyone. In this quick video, I'll go over a question with you in Excel that will show you how to build a very basic balance sheet and how to calculate net working capital using basic balance sheet data. So consider Zing Incorporated. You're told it has current assets of $5,400, net fixed assets of $28,100, current liabilities of $4,100, and long-term debt of $10,600. You're asked, what is the value of the shareholders' equity and net working capital? Now, what I've done here is that I've incorporated all this information in Zing's balance sheet. A balance sheet for any firm shows the worth of all of its assets, the worth of all of its liabilities, and the worth of shareholders' equity. Specifically, the left-hand side of the balance sheet shows the worth of all the assets, including short-term assets, which are called current assets, and fixed assets. One way to think about assets is that this is where all the money for the corporation went. This is referred to as the uses of cash, where the cash was used up. And if the cash was used somewhere, well, it must have come from somewhere. And that is the right-hand side of the balance sheet, which is liabilities and equity. Specifically, money can only come to you in two ways. You can either use your own money, which is what we refer to as owner's equity, or it can be borrowed from somewhere, which means that it's a liability. You have to pay it back. And that liability can either be short-term, you have to pay it back in 1 year or less, or it can be long-term, such as long-term debt. In fact, this is what is referred to as the balance sheet identity, that the uses of cash must equal the sources of cash. If the cash is being used somewhere, it must have come from somewhere, so the two have to be equal, which is why we say that assets have to equal the sum of liabilities or debt plus owner's equity. Now, to figure out the worth of Zing's assets, all you got to do in Excel is use the sum function. So you say equal to sum. You open the parentheses and then you highlight all of these cells. This will, by definition, take the sum of all the numbers in these cells. Those cells which are empty will, by default, get a value of 0. Now, if you close the parentheses, this says that the worth of all of Zing's assets is $33,500. It has to be the case that $33,500 came from somewhere in the form of debt or owner's equity. Now, if you actually take the sum of just debt, which is current liabilities and long-term debt, you find that the debt is only $14,700. This cannot be. The left-hand side of the balance sheet has to equal to the right-hand side of the balance sheet, which must mean that the rest of the funds to support $33,500 worth of assets came to you in the form of owner's equity. And so owner's equity has to be equal to the difference between $33,500 and $14,700, so $18,800. And so this is how you can figure out the value of shareholders' equity. The second part of the question asks you, what is the value of net working capital? I'll abbreviate net working capital as NWC. Net working capital is the difference between a firm's current assets and current liabilities. So short-term assets and short-term liabilities. One way to think about net working capital is that this is how much the firm has invested in short-term assets, just short-term assets. As an example, let's suppose that this $5,400 right here, let's suppose that this is inventory. In other words, the firm went to its suppliers and bought $5,400 worth of raw materials. Now, if the firm had actually paid for all that inventory in cash, this means that now your cash is tied up in all this raw material, which is $5,400. However, it is possible that the firm actually told its suppliers, look, I'm going to pay you back later. So you generate an accounts payable, which is a current liability. Let's suppose that the supplier says, okay, maybe you pay me a little bit, but then you can owe me $4,100 for this raw material. So this current liability or accounts payable is $4,100. Then technically, the firm hasn't invested a lot of its own money in this net working capital or this inventory, right? Because it's actually borrowing from its suppliers. So if somebody says, hey, how much of the money has actually been invested by the firm itself in its inventory? You say, well, it's the difference between $5,400 and $4,100, which is $1,300. So $1,300 is the investment in net working capital or short-term assets. So there you have it. A quick video on how to build a very basic balance sheet, on using the balance sheet identity to calculate shareholders' equity, and on calculating net working capital using Excel. If you found this video useful, click the like button and subscribe to the channel. And feel free to ask any questions using the comment section. Happy learning.